Numbers out of AngloPlats, also from Harmony. Those numbers had been pretty much flagged, particularly from AngloPlats. Chat to us about those headline earnings per share for last year, up 570%, and that looks like a decent rise.
Most certainly. I mean, I think they were coming off a very low base. But I think that earnings just coming in below just shy of 20 Rand for the half year probably places Amplats in the best position it's been from an earnings point of view in quite a while. Also the dividend surprised on the upside. So yeah, it's a fair set of numbers from Amplats, still not the cheapest stock on the market. I think you saw it in the Impala numbers coming out a couple of weeks ago as well. The platinum producers I think are struggling, although it shouldn't be with such a strong platinum price, but I think the Rand has weighed a little bit on them, but still good to see the numbers coming in with a very strong Rand.
And do you think the earnings we're seeing coming through are starting to justify the share prices of these platinum companies?
If you have a look at the last week, I think you would have seen that Impala and Amplats haven't moved that much with the rest of the move in the market. I think the heavyweight commodity stocks like the Anglos, the Billitons, the Sasol have had massive moves, whilst the Amplats and the Impalas have moved up or drifted up slightly with the market. So I think the market is probably moving out of the platinum stocks into the bigger, heavier weight stocks such as Impala, such as Anglos and Billiton. But so I don't think they're the cheapest stocks on the market. I think you've got to have platinum in your portfolio. My preferred entry is always Impala over Amplats. So are they justifying their prices at the moment? I certainly wouldn't be buying them over here. I'd probably be keeping them in my portfolio, but certainly not adding, especially with the levels we're seeing in this top 40, what it's done in the last week.
And of course, we saw that share price down 2% today, 714 Rand. Do you think that those results had already been priced into that share price since we had some prior warning of how good they would be?
Yes, most certainly. And they were coming off a low base as well, sure.
Well, let's take a look at Harmony Gold then. It's headline earnings per share 69 cents for the December quarter. That's up from 33 cents. Gold production slightly lower. We did have gold, though, in dollar terms, hitting a record high in December. Most certainly. And once again, the good thing to see, I know earnings have doubled, but always good to see Harmony making a profit when the Rand has been so strong. It's good to see they're saying that they will meet their longer term expectations. That's still to be seen. Once again, Harmony, not my favorite entry into the gold sector. Anglo Gold would always be my favorite entry. But if you do see a Rand that weakens further, most certainly Harmony's a play. It's one of the most sensitive stocks to a weakening Rand on our market. So just depending on your call on the Rand, really. I think Harmony, for me, is certainly not the cheapest stock in the market and not where I'd be putting my money. Well, going into the current quarter where we have the Rand on a weakening trend, would you be more inclined to start looking at Harmony? Although that gold price has come off of the highs that we did see back in December. So I suppose it would really depend on your outlook for the gold price as well going forward. Yeah, you know, the thing is, it's tough to call where these markets and where these commodity prices are going to be going. I mean, you have a look, the euro dollar was at 138 on Friday. It's now at mid 135. So it's a tough call to see where these things are actually going. My preferred entry actually into the gold sector is actually a gold tracker, so either the SPAG1 listed by Standard Bank or the GLD, the better known GLD by ABSA, where you get a pure tracker on the Rand gold price. It would be my preferred entry into the gold sector. Perhaps moving on to the gold sector and taking a look in the financial sector, Old Mutual only up 1/5% today, but this is a share that's now trading about 15 Rand, so it's a share that has made some good ground up this year. Yes, most certainly. I mean, if you have a look at Old Mutual, it traded earlier today, I think just below 1570 before coming back quite a bit. Probably closed in 1515, 1520. I wasn't at the screen for the end of the market. But I think if you have a look at Old Mutual, it's cheap. They're looking to restructure. They're looking to unbundle. They potentially could sell their stake in Nedcor, although that's been shelved for now. And it's trading still well below its embedded value. Probably its embedded value between 19 and 20 Rand. If you have a look at a Sanlam's trading above its embedded value. If you have a look at a Momentum's trading about 15% below its embedded value, and a Mutual's probably still 25% below its embedded value. So we do see some more upside, or I do see some more upside in Old Mutual. Being tempered because let's think about it. The market has had a massive move over the last week, so I don't think you can expect these shares to go up a Rand every week. So I'd like to see Old Mutual and these stocks try and consolidate these levels, especially Anglos and Billiton. I don't know if they will, and then look to enter Old Mutual if it comes lower.
You said our markets had a great ride over the last week, and since between Tuesday and Friday we surged. Today we seem to have retraced some of those as we headed into the afternoon. Do you think this rally we're seeing in the markets is intact? I see US markets, European markets trading higher again today, despite slightly mixed jobs data out of the US on Friday.
Yeah, I mean, you know, the mixed job data is always a tricky one for the market. I think bad job data continues to be supportive of stimulus in the US, and I think if you have a look at what we're seeing with the US and the European markets, although Euroland's not in good shape, I think you're seeing that where you're going to put your money, you have to be in the stock market, and I think our market will get dragged up with those other markets. I think the US market probably still continues to grow higher. Earnings yields on the S&P 500s are higher than they've ever been, and dividend yields as well. So I think most certainly you see those markets go high, and our market follow them.